Hey, are you feeling like you missed out on the peak of the housing market and your best chance to sell your home for top dollar? Well, if you're feeling like this, well, you're not alone. But here's the thing, you can't time the market. It's impossible to time the market. Experts can't time the market. They can make their predictions, but if you go back and look at what they really said and what they thought, they don't always get it right. And if you do happen to sell your house at the perfect timing, at the peak of the market, you got lucky. If you can get somewhere close to the top when you sell, be happy. But remember, if you're selling at the peak and you're immediately going to go turn around and buy a new house to live in, you bought at the peak too. So once you buy your first home, once you have that home, it gets a little bit more complicated to when you do it. So you have to look at other things other than finances. It can't just be all about the money. It has to be about what your needs are. Do you need a bigger house? Do you need a smaller house? Do you need to relocate? Do you need to move? Do you need to go closer to a job? You get the idea. So it's not all about the finances. It's more than that. And we've been in a seller's market for a really, really long time with jaw-dropping increase in home prices that people just couldn't afford, to be honest with you. And the low interest rates made it so that people were able to make those moves and buy. And this wasn't just in the Bay Area where I live. Home prices have gone up all over the country, places that you wouldn't have thought that they've gone up. And this has been caused by several different things. Low interest rates gave people more buying power. We had a pandemic, which made people not move as much. So that created low inventory. Then we had people working at home who needed to move because they needed more space to work from home, because kids were at home too, schooling at home. It was just all of these things were happening. And it really did change our housing market. All these things stirred up our housing market like a tornado. So we're seeing a shift in the housing market. We have higher interest rates, and it's put the brakes on some buyers. I mean, for some people, they just can't afford what they could have afforded before. The higher interest rates drastically impact the monthly payment, which people buy homes on monthly payments because that's what we got to know. Can I afford a house from this month to next month? So with interest rates going up, it's giving people less buying power and giving them pause. Like, should I still buy with these high interest rates? And they're questioning that and maybe feeling stuck, like they missed out on an opportunity to buy when the interest rates were low. And frankly, they're reconsidering buying at all. But we have to be realistic in that even though the rates have gone up, they're still historically low rates. So will they go all the way back down to where they were? We don't know. But if you still want to buy a house, you have to take that into consideration, because if the rates continue to go up, you might look back on this time a year or two from now and think, man, well, back then when I thought I shouldn't buy, I really should have done it then, because now I haven't had another opportunity like this. So if I just described how you've been feeling in your current situation, keep watching, because I'm going to dig deeper and see what the experts are predicting for our housing market. In a May 27th article on Fortune.com, Moody's Analytics chief economist Mark Zandi said, "We've officially moved from a housing boom into a housing correction. The real estate data rolling in for April and May shows that the U.S. housing market is softening. New home sales fell 19% to their lowest level since April of 2020. Redfin reports 19% of homes listed cut their list price over the past month. Inventory is rising fast, while mortgage applications and existing home sales are also falling." Zandi says a housing correction means the end of a housing boom and the beginning of a period when home prices will fall in some regional markets. Over the next 12 months, he expects year-over-year home price growth to be 0%. If that comes to fruition, it marks the worst 12-month stretch since 2012. Now, reading it out loud like that, it sounds really, really bad and drastic, but I want to just point out that it's not as bad as it may come across on the surface. Zandi isn't predicting a 2008 style crash or foreclosure crisis. Homeowners are in a better position now than they were back in 2008 when that last crash happened. They have equity this time around. That is a huge thing. That's something that people had negative equity in 2008. They were buying homes that the monthly payments weren't covering even the interest. So every month they just owed more and more and more, thinking they'd refinance later. We are not in that type of situation today. And if the interest rates are really what's impacting a housing crash, the Fed has the power to reduce those interest rates again to prevent that type of crisis from happening. I don't know if they would. But just saying, they have more control over what the outcome ultimately would be. Zandy also said we could see a 5 to 10% decline in overvalued markets. So he's saying that some of the markets that had really, really high increase in home values are overvalued, that they just went way above where they should have been. And not that they're crashing back down, but that they're going to be correcting. So 5 to 10% back down probably doesn't even bring them back down to where they were pre-pandemic in most markets. So should you sell your home and buy a new one or relocate with the current situation the way it is? I'll tell you what I think. It's really impossible to time the market just right. If you can get somewhere at the top when you're selling, be happy. Even if you're on a little bit on, the way up or on the way down, that's a good spot to be in. You need to consider your needs first. Do you need a bigger house? Do you want a bigger backyard? Do you need to be closer to school, to family, to your job? Those things need to take a little bit more priority than hitting the market just exactly right. And interest rates are up a little bit, but they're still historically low. So it's all relative. When I bought my first home, my interest rate was 8.5%. 8.5%. And I actually have friends that were buying just before I did, and they were closer to 12%. I think somebody even told me recently that when they bought their home, it was 14%. I mean, imagine that. Where we're at now is nothing compared to that. And also keep in mind that you have options that could make the loan part of it less painful. So you should definitely talk to a lender and find out all the different options that they have. I was recently talking to one of my preferred lenders that I like to work with, and they were telling me about some programs that they have that are fairly new. One is called a lock and shop. So you lock your interest rate now, and you have some time, a month, 2 months, something like that, to shop for the home, to find the home that you're going to put that interest rate on. This is a really, really great option because if you're not quite ready to buy, but you're just shopping, you don't want to feel rushed because the interest rate might go up. So this protects you. So you know exactly what your rate's going to be while you're shopping for a home. Another option that they have, if you have a home you need to sell in order to buy, but you're worried about maybe what if you can't find a home to buy after you sell your home and you don't want to be homeless? Well, there's another great option that they have. It's called buy before you sell. And that is, they can qualify you for a loan, taking the debt of your current mortgage out of the equation. So usually they take that debt that you have on your current mortgage and they factor it in. So a lot of people have trouble qualifying for 2 mortgages at the same time. With this new program that they're offering, you don't have to qualify for 2 mortgages at the same time. They will take that into consideration. You just have to commit to putting your house on the market as soon as you close on your new house. Those 2 things together, lock and shop and buy before you sell, are great options. And you can also always buy down your rate. If you feel like your rate is too high, if this is a mortgage you want to be secure in and you want to keep it for 5, 10 years or for the duration of the loan, you're no intention of refinancing it, maybe buying down that rate is a good option for you. So my point is that there's a lot of options that lenders have, a lot of programs that they have to offer that could really help you out in your search and make you feel a little bit more comfortable moving forward with your plans. Don't feel like you missed out. Just get a little bit more creative about how you go about shopping. You still have lots of options. And like I said before, if you're planning to stay in your home for 5 or 10 years, do what works best for your needs and make the move that makes the most sense for you. And this is something I always like to think about. Who do I know who has owned a home for 10 years or more and their house is worth less than it was when they bought it? Nobody. So chances are you'll be in that situation. You're going to keep your house for 10 years, 15 years. The small details aren't going to matter. If you're in need of a real estate agent, I can help. All my contact information is in the description below. Help me out by subscribing to my channel, and I'll see you in the next video.